I thought it was a relief. This is financial freedom, I thought. That's what one single mother of three, we will call her Deanna, believed when she first saw the money coming in. But that feeling wouldn't last. In just a few months, her dream of financial security would unravel into a waking nightmare. She would later express her strain and frustration, desperately wanting her money back, all $150,000 of it. One day she had her life savings, built on years of hard work and borrowed against her own home. The next, it was all gone. Her story is a terrifying warning that's becoming all too common, a stark example of how fast a dream can be shattered. And the way it all went down is a critical lesson for every single person watching. To get how this happened, you have to get to know people like Deanna. She isn't some high-flying tycoon or a Wall Street gambler. She is a single parent with three growing boys, working a full-time job and a part-time one on the side just to make ends meet. Life was a constant juggling act, a world of bills, responsibilities, and that quiet creeping stress of making sure there was always enough. For someone like Deanna, financial freedom didn't mean yachts or sports cars. It meant just a little bit of wiggle room. It meant letting her kids join another sports team without having to agonize over the cost. It was about a little bit of breathing room. It was in a state of exhaustion and hope that she stumbled upon what looked like an answer. And it didn't come from a bank or a financial advisor. It came from her phone, like millions of us. Deanna was scrolling through Instagram Reels. There, squeezed between cooking hacks and dancing challenges, she saw them, slick, convincing videos promoting something called private lending. The clips were persuasive, framing it as a secret the wealthy use to build passive income, a way to get second income working for you. The promise was intoxicating. To someone juggling two jobs, the thought of your money working for you, instead of the other way around, feels like a lifeline. This wasn't about getting rich, it was about buying back time, cutting down on stress, and building a better life for her kids. The algorithms had found its perfect target. The videos made it all seem so simple, so accessible. It felt less like a risky investment and more like a smart, modern way to get ahead. And fueled by that promise, Deanna made a decision that would change her life forever. The social media videos planted a seed. Deanna started looking into it, but her research was probably colored by the same rosy picture the algorithms had painted. She found a company. We will call it Unifocus for our story, run by a charismatic founder. It all looked completely legit. The idea was simple. Deanna would lend her money to that company, which then would loan it back to the people who couldn't get traditional loans through the bank, like real estate developers and house flippers. Since these borrowers are a higher risk, they pay much higher interest rate. A slice of that juicy interest would then be paid back to Deanna. Convinced this was her ticket to financial relief, she took the biggest financial gamble of her life. She went to the bank and secured a $150,000 line of credit against her home, the very foundation of her family's security. She then signed that entire amount over to an investment company. For the first year, everything went exactly as promised. It was even better than she had hoped. Every month, a payment of $3,000 landed in her account. It was life-changing. It was a financial relief, she said, some wiggle room. Her kids would pick up extra sports. It was really working for her. The constant financial pressure started to fade. That investment wasn't just working. It was spectacular success. She had done it. She had found the secret. This initial success is a classic part of these schemes. It builds a powerful sense of trust, and that makes you feel brilliant. It slices any doubt you might have had, making you even more vulnerable for what comes next. For Deanna, that first year of payment wasn't just income. It was proof that her big risk was paying off. The dream came to a dead stop. After a year of reliable returns, the problem started small. Last year, the payments that were once like clockwork started to show up late, and then they stopped completely. The lifeline was severed. Panic started to creep in. Deanna reached out again and again, trying to figure out what was going on. In June, after months of being in the dark, she formally asked for her money back. She wanted her principal, the entire $150,000 returned. For 7 months, she was met with a wall of silence, delays, and frustrating non-answers. The money never came in. The person that she had once trusted with her family's future was no longer responding like she used to. When the news reporters started investigating similar cases, the company's response was a masterclass in corporate evasion. They'd say something like, "We are currently conducting a full internal review and are actively pursuing solutions with the third company involved. We are unable to comment on specific account details at this time. No timeline, no promise of repayment, no real accountability, just an internal review." For Deanna, the message was loud and clear. The money was gone. The realization was crushing. "I'm back to square one," she said, the stress and frustration evident in her voice. "And it's really upsetting for the whole family." Not only had she lost her $150,000, but she was now chained to a massive line of credit debt to her bank, a debt she still had to pay off. Her attempt to build a safety net instead dug a financial hole so deep it felt impossible to climb out of. Deanna's story, as gut-wrenching as it is, isn't a one-off. It's a perfect illustration of a danger in hiding in the unregulated world of private lending, an industry often glamorized on social media but packed with hidden risks. So, how is this even possible? How can $150,000 just disappear? First, you have to understand what private lending actually is. As financial experts like Mark Tang often explains, people who go looking for private loans usually have been rejected by major banks. Banks have teams of professionals whose entire job is to figure out risk. If they won't give someone money, there's a very good reason. Private lenders jump into this space, giving money to those riskier borrowers. And in return, they charge a much higher interest rate. And right there is a core lesson. The higher the interest rate you are offered, the bigger the risk you are taking. The promise of a huge return isn't a sign of a secret opportunity. It's a giant, flashing warning sign of immense risk. In Canada, there's no government protection for this kind of deal. Unlike a saving account at the bank, your money isn't insured by the agencies like CDIC. If the deals go south, your principal is gone. In cases like this, investors are exposed to multiple layers of risk. First, the risk that the borrower just won't pay. The people these companies lend are already on shaky ground. In a tough economy, they are usually the first to default. When they stop paying the lender stops paying the investors. Second is the risk of mismanagement or straight-up fraud. That vague talk of an internal review in a third-party company is a massive red flag. In an unregulated space, there's very little transparency. It's almost impossible for an investor to know exactly where their money is or if the person they've even trusted is acting responsibly. Finally, and most painfully, is the risk of leverage. She didn't invest spare change. She invested and borrowed money. This multiplies the losses exponentially. She's not only out her investment, but now she is also to pay the bank back $150,000 plus interest. This is the single most important lesson from her story. Don't gamble with the money you don't have. I would not be comfortable myself. and I wouldn't recommend it to anyone unless they are extremely wealthy and they could afford to lose that $150,000 and not worry about it. This story is a painful but powerful teacher. It lays out some critical rules for anyone thinking about investing, especially when the idea comes from your social media feed. First, stop using social media as your primary source of financial advice. Influencers and slick videos are designed to sell you a dream, not to give you balanced risk assessment counseling. Their goal is to get clicks, not protect your future. Always talk to a certified financial planner or a licensed professional before making a big money move. Second, if it sounds too good to be true, it is. A monthly return of $3,000 and a $150,000 investment is a 24% annual return. This is an absurdly high and unsustainable number, and it signals an equally absurd level of risk. Healthy long-term investment is a slow and steady game. Anyone promising you fast, easy money is selling you a fantasy. Third, understand your place in the food chain. In private lending, especially for property, the safest spot is holding the first mortgage. This means if the borrower defaults and the property is sold, you're the first one to get paid. If you are an unsecured lender in a pooled fund, you're at the bottom of the list. You'll probably be the last one to get paid, if you get paid at all. And finally, never, ever invest money you can't afford to lose. And absolutely do not use leverage like a line of credit unless you are a sophisticated investor who fully understands and can handle the responsibility of a total loss. The story of Deanna is about a single mom working 2 jobs who thought she found a way to give her kids a better life. Instead, she fell into a trap that has become terrifyingly common. The best way to fight back against these schemes is to make people aware. Please share this video with your friends, with your family, anyone you know who might be tempted by these online promises of easy money. You could stop someone else from living this nightmare. This story isn't about losing money. It's about a dream for a better life being destroyed. It's a brutal reminder that in the world of investing, there are no shortcuts. Be skeptical. Be cautious. Do your own independent professional research. If you have found this information helpful, please subscribe and hit that notification bell. The promise of financial freedom that flashed across a phone screen led directly to financial ruin. By learning from this painful experience, we can make sure we don't make the same mistake. If you are thinking of selling real estate, please give me a call. My contact information is in the description below. Until next time, see you soon.